Forget the daily charts and the noise. We are not talking about short-term pumps. We are talking about the structural factors that make Bitcoin to $150,000 inevitable. If you have any BTC in your portfolio, you need to understand the two massive forces converging right now. In the next 5 minutes, we'll break down the great liquidity shift and the ultimate regulatory and macro catalyst that ensures 150K is not a dream, it's a mathematical certainty. Welcome back to Crypto Market Views 24. Let's find out when 150K hits.
The first and biggest catalyst is the great liquidity shift. The successful launch of spot Bitcoin ETFs in the US has fundamentally changed the supply-demand dynamics forever. Before the ETFs, institutional capital had to jump through complex regulatory hoops to access Bitcoin. Now, major pension funds, wealth managers, and hedge funds can buy BTC as easily as buying an Apple stock. Every day, the ETFs are sucking up thousands of Bitcoin from the market, creating a constant, inelastic demand. This isn't retail buying. This is trillions of dollars of institutional money, slowly but surely, entering the crypto ecosystem. This persistent institutional demand alone is enough to push Bitcoin well past the $150,000 mark.
The second structural force is a combination of macroeconomic policy and regulatory acceptance. Globally, central banks, led by the US Federal Reserve, are actively cutting interest rates due to falling inflation and slowing growth. This so-called global easing cycle injects new liquidity into the financial system, devaluing cash and pushing capital into risk-on assets like Bitcoin. Bitcoin is the ultimate inflation hedge during this cycle. Furthermore, the SEC's approval of the ETF is the final regulatory nod the asset needed. It de-risks Bitcoin entirely for major financial firms globally, including Europe, further legitimizing it as a mandatory portfolio allocation. These two factors, liquidity shift and global policy, are creating an environment where demand is guaranteed while traditional asset returns dwindle. 150K is the floor, not the ceiling.
In conclusion, the path to $150,000 is laid out by institutional money and fundamental economic mechanics. If you want to outperform the market, you must focus on these structural trends, not the daily volatility. If you found this institutional analysis valuable, make sure you take 2 crucial steps now. First, subscribe to Crypto Market Views 24 and turn on notifications so you never miss a critical market catalyst. Second, watch our video breaking down the MiCA tax advantage in Europe, which is saving savvy investors thousands every year. Smash that like button, share this 150K forecast with your fellow investors, and thank you for trusting us with your market views. I'll see you in the next analysis.